The Wild West unregulated days of buy now, pay later services is coming to a close. My name is Maria Spragas. I am a payment processing expert with over 20 years helping merchants navigate the complications and the regulations in payment processing. Today, I want to talk to you about buy now, pay later services. Services like Klarna, Afterpay, Sezzle, PayPal's Pay Later program. So these are essentially programs that allow customers to buy from you and pay in various payments. So this can range between 4, 6, 10 payments, oftentimes for even very low cost products or services. Things like $100 meals from Uber Eats or yoga pants and so forth can now be broken up into micropayments to make it more manageable for consumers and obviously increase sales for merchants. Now, in this episode, I'm going to talk to you about the big changes that are coming because regulators have stepped in and have said, a lot of the practices that are now very common for buy now, pay later services are now becoming abusive to consumers and causing people to go out of control with their credit. So the Consumer Financial Protection Bureau has now stepped in and is now going to start regulating and putting some rules in place to make sure that obviously consumers are protected and that these services now have some specific rules for merchants to abide by to ensure that consumers are not abused and not cause them any unnecessary harm. Now, more importantly, I'm going to explain to you also what is changing and how you're going to ensure to protect your revenue so you don't lose any sales by these new regulations. Up until now, buy now, pay later services were kind of in this gray area of being sort of like credit card companies, but also being lending companies. So what the Consumer Financial Protection Bureau is trying to do is they're trying to ensure that it is now clear what these companies do, what role they have, and they want to make sure that the fees are very clearly stated for consumers, that the terms of repayment are very clear, and that consumers are not overextending themselves by adding more credit to their file. And very importantly, one thing that hasn't really been brought to too much attention is what are the refund policies? What happens if a customer no longer wants that product or service or has a complaint but still has, for example, 2 or 3 payments left? So refund policies have been very much in the gray area, and the Consumer Financial Protection Bureau really wants to bring these to light and make sure that these service providers that offer these buy now, pay later services abide by certain rules and really reinforce them to the end merchant so customers are not caught off guard and don't understand what they're getting themselves into. Moving forward, buy now, pay later service providers need to abide by the same rules as credit card companies. So in plain English, what they need to do is they need to have clear disclosures to consumers as to what they're paying, what the frequency is, and any additional fees. They need to be precise on what happens with disputes or refund requests and so forth, and give consumers a time period to be able to refund or get their money back or present a dispute. They also need to be reporting repayment activity back to the credit bureau, because if a consumer, for example, defaults some of these payments, they may have some issues with their credit, but if they repay back that loan, many of these companies have not reported it back. So they need to make sure that they report it back to the credit bureau so consumers can ensure that their credit is repaired once they make the proper arrangements to pay it back. And most importantly, and something that consumers are not aware of, buy now, pay later providers need to be transparent about their late fees and about the consequences for non-payment. So as you notice, with these new regulations, regulators couldn't ignore this any longer. Consumers were getting very negative consequences to their credit files. Consumers were really overextending themselves in credit by buying things that perhaps they didn't need, very small ticket items, and really splitting up payments into ridiculous amounts. For example, Uber Eats, DoorDash, and all these food companies now, food delivery service companies, are now offering to pay in installments. So if you eat your food today, you could be paying for this meal for the next 6 months. So obviously this can add up to a lot of negative consequences for consumers. So it was time for the regulators to make sure that there's some clear rules in place and that consumers are really informed of what is actually happening and what they're getting themselves into by accepting a buy now, pay later service. Now let's discuss what the consequences are to merchants specifically. If you are a business owner and you accept buy now, pay later, as most business owners do because it's a sign of the times. A lot of customers want that flexibility, want to be able to pay with payments. So what is happening in your business if you accept these payment options? So providers like Klarna, Afterpay, and PayPal's Pay Later offer pay in 4 type of installments where they charge merchants approximately 4 to 6% in order to have customers split up the payment in 4 and be able to more easily buy, even if it's a small ticket item and so forth. This is kind of the common business model for these types of providers. In addition to the 4 to 6% fee, they usually have some small flat fee as a transaction fee or a processing fee. So this can really add up. And usually by the end of it, you're paying 6 or 7% as a merchant to be able to offer this option to your customers. Now, there are some other options for longer term payments, for example, 6, 12, or 18 months. Affirm and Sezzle do offer these type of long-term installment payments, but it does come with a financial consequence for merchants. Merchants are charged between 6 and 10% in order to be able to provide that type of payment option to the customer. And also, if you are in a niche that would be considered high risk, for example, anything in the travel space is considered high risk, then you may even start paying something like 12% in order to be able to offer this to your customers. Now, if you compare that to credit cards typically charge between 2.5% and 3.5% for transactions. And obviously, there is a big difference with credit cards. The credit card transaction is not guaranteed. So for example, if you offer installment payments by credit card, you can capture the payment this month, but your customer may not have money next month on their credit card. They may be over their balance and you might get an insufficient funds. And then obviously, you are not able to bill the customer. In the cases of buy now, pay later services, customers must reimburse the buy now, pay later service providers. If not, they will have an issue on their credit file and it's reported to the credit bureaus. Now with credit cards, it's a little bit more complex. A customer has to miss their minimum payment, but in fact, if they default on paying you a subscription that they agreed to, they will not have any issues with their credit file. You just won't be able to, as a merchant, collect a payment for a service or a product that you provided them. One thing to keep an eye out for is because of these new regulations and all these different things that the service providers for buy now, pay later have to abide by, I wouldn't be surprised in the next 6 to 12 months that these fees actually increase. So, obviously as a merchant, you need to pass these fees on to the consumer, and it's going to start getting very expensive for consumers to be able to have the luxury of paying over 6, 12, 18 payments. Now, for smaller ticket items, under $250, I can foresee that these services will now be very strict upon who they allow to use these types of services, because people who have to split up, for example, a $100 product into 4 or 6 payments obviously have some issues with their credit and may have some problems repaying it back. So you will now see a lot more refusals to these types of products. So as a merchant, you need to be prepared and to have other payment options available to make sure that you're able to capture those sales. Now, it's important for you to also understand as a merchant, what are the consequences to your consumers? These are not direct consequences that are coming from your business, but they are coming from the companies like Sezzle, Affirm, and other buy now, pay later companies. So if you are offering that specific payment mode and the customer, suffers some bad consequences, it may relay back to you because you are the one who offered the product or service, even though you're not the one who is, for example, reporting to their credit bureau or having some negative consequences on their credit. They may associate the negative experience with buying your product or service. So if a customer, for example, chooses to pay in 4 installments, oftentimes they don't get any interest charges. They're able to just split it up in 4. And if they pay on time, everything seems to go pretty well. When you have longer installment periods, it's very common for these companies to offer APR rates of 10%, 12% to the customers to be able to split payments over 18 to 24 months. So in addition to paying you the product or service, the customer is also paying an extra 10% in order to finance that purchase. And 10% is usually the starting rate. If the consumer has, less than ideal credit, that can go up easily to 15 to 20%. So these are huge amounts of fines that are placed upon consumers for splitting up payments. And obviously, if the consumer has to split up the payment, it's likely that they don't have the money to pay for the product or service in the first place. Now, if the customer is late in repaying an installment, it is likely they'll get charged $7 to $10 as a late fee. And if it is a large transaction, if the amount is large, they may even have to pay a percentage of the transaction. So the consequences can be huge. And obviously this can cause a lot of harm to consumers, which is why, some rules and regulations need to be in place. Now, under the new rules proposed by the Consumer Financial Protection Bureau, repayment activity must be reported back to the credit bureau. So if, for example, somebody, as I said, defaulted on a payment and then goes back and repays, then the companies like Affirm, Sezzle, and buy now, pay later companies must report that activity back to the credit bureau so it can repair the damage that it may have caused to the consumer's credit file. Disputes, chargebacks, and refunds will now abide by the same rules that credit card companies have to abide by. So customers will have access to filing a dispute or requesting a refund if they are unsatisfied and if they have a valid reason. So this is obviously a very good thing for customers, but this does put a lot more pressure on merchants because, for example, if a merchant has collected the payment and fulfilled the product or service, they will now have to go through a third party like Affirm, Sezzle, and so forth to dispute back. And this could take more time, and this could cause obviously a lot more losses for merchants. Also, conversions are key. So converting more sales is why these types of payment modes became popular, especially in the last couple of years. A lot of consumers are more credit strapped. So these types of payments became very popular because, splitting up $100 in $25 chunks over 4 installments is a very enticing offer, but approvals will now get tighter. It will be important for these buy now, pay later companies to really assess whether the customer can afford this, what their, history is with using these types of services, and they may now face higher declines when they feel that the customer should not be splitting this, should not be buying this, and so forth. So the same things that, cause credit card companies to decline a transaction will now start being applicable to the buy now, pay later companies. This is obviously because too many consumers were just stacking up debt and were unable to pay back at the end of the month. And it was for products and services that have a limited shelf life. For example, an Uber Eats meal that you consume today, paying for it 6 months later just doesn't make sense anymore. So it was important for regulators to really go in there and really put in some rules to make sure that consumers don't overextend themselves. Now, the impact for buy now, pay later companies like Klarna, Afterpay, and Affirm is that they will need more staff and more regulations around compliance. It will get a lot more expensive for them to continue operating as they have been. So what that means is likely higher fees for merchants. Also, it will be longer to get approved as a merchant because they will have to check and verify more things about your business before they approved. So gone are the days of the plug and play Affirm and just get started. And obviously, they're going to be a lot stricter on the types of merchants that they approved. If you're in a category that's considered high risk, you may not have this option anymore. So it's going to be important to look into diversification and making sure, obviously, that you don't lose any sales by, for example, being declined for a buy now, pay later service. Now, what this means for you as a merchant is that your buy now, pay later fees in the next 6 months will likely increase. If you are now accepting it and they continue to let you accept these types of payment modes, then you will likely see a slight increase to your fees, and you'll have to decide, whether you absorb that cost or whether you pass it on to your customers. So it is possible by offering this type of payment mode that you will have to increase your prices in order to be able to continue to support these types of payment services. And as I mentioned, even though you're perhaps accepting it right now, the rules will be tighter. If you're in any type of coaching or education type of product or travel, you may start seeing closures and a lot of these service providers not accepting your business type. In the past, onboarding was very fast. If you wanted to accept Affirm, Klarna, PayPal's Pay Later, you would just sign up, you'd be ready to go usually within a couple of hours. So this process of onboarding will now take at least a couple of days, as there are new rules for them to abide by and compliance needs to be met. So they will actually be doing a lot more checks and balances on your business before deciding to support you. And keep in mind, even if you are working with them and things are going well, if you get a couple of disputes or refunds, you are very likely going to get closed down. So it's very important that you tighten your billing practices, that you're very clear with your customers, and that you avoid getting any types of disputes, because if you get even a couple, as I said, and it falls out of the norm of the regular pattern of your customers, you are likely going to get shut down by these types of providers. And because the rules are tightening and things are getting more difficult, it will be a lot harder for you as a merchant to find another provider that can help you with buy now, pay later options. So buy now, pay later up until this point was a fun little add-on that many merchants added to their store. It is now becoming a full-on credit product, which will take a lot more time to set up and a lot more maintenance for merchants. It is time to take your consumers and perhaps provide them other options that are easier to maintain for you and cost a lot less and have obviously a lot less regulation. So here's what I recommend. If you're using buy now, pay later services and it's working for you, obviously you want to keep that option because you don't want to lose any sales. But you should take a look at all your payment options. And, depending on what market you're selling in, there could be some very interesting payment modes, alternative payment modes that cost very little and can get you, 5-10% extra sales because consumers may prefer it. For example, obviously credit card is a big one, and you may want to start offering ACH. ACH is a very popular product for customers that perhaps don't want to rely on credit. There's also a lot of very popular wallets that are around, and customers have various deals with these wallets, may have preloaded funds in them, which makes it easier for them to use. So look into your market, take a look at what options are out there. And oftentimes these products and these payment modes cost very little. For example, ACH really costs pennies. It doesn't take very much to get approved for it, and you can be up and running very quickly, just like was the case with buy now, pay later services. And for a lot of credit strapped consumers, ACH still is one of the best ways to pay because they can make sure that they can budget accordingly because they don't have credit to rely on. Now, another thing in your store, if you have a buy now, pay later already active, it's very important from now on to start looking at your approval rates. You'll start seeing things slide a little bit more depending on what, buy now, pay later service you offer and how many payment modes. The split in 4 payment options, those likely will continue to stay there because these are low risk and there is no interest that's charged to consumers. Where you're going to start seeing a bigger impact is for the 6-month, 12-month, 18-month type of installments where customers also have an additional financing rate. They may have higher late fees and so forth. So it is important for you to track your current approval rate under these payment modes. And as it evolves and the situation changes and compliance becomes stricter, what will be your new approval rate? Now, you may panic at this point and say, you know what, let me sign up to Klarna and Affirm and Sezzle and so forth. So you have to be cautious about this. You don't want to overextend yourself and have too many providers. You want to align yourself with a buy now, pay later provider that understands regulation, that's been supportive of you for a long time. And as much as possible, you want to tighten the amount of installments that you offer. As I said earlier, 4 installments with no interest payments, those will likely still be a winner. But when you start offering 6, 12, and 18-month type of installments, that's where things are going to get stricter. So take a look at your policies and really work with somebody that you feel understands the landscape and is being compliant. The last thing you need is for a regulator to jump into a company, close it down, and obviously cause some issues for you in terms of collecting your payments. Another very important thing is to audit your dispute and refund ratios with these buy now, pay later service providers. You need to know where you stand right now. And if you see any type of uptick or if you see customers complaining more than they did in the past, it's important to audit this process and take a look at what's causing the issue. As I said, if you're offering very long installment periods, customers tend to use a product very quickly and then 6 to 12 months later, they don't want to continue paying for it. So you may want to consider, lowering the amount of installments to give that flexibility to your customers to pay it off a little bit quicker and obviously not have to suffer from high interest rates. And lastly, what you want to do is you don't want to remove any payment options, obviously, that are increasing your sales and giving more flexibility to your customer, but you need to budget realistically. Right now, as I mentioned, it could be between 4 and 12%, depending on your industry, depending on the number of installments and the cost of your product. So you can expect this to increase because these types of companies like Sezzle and Affirm and so forth will now have to face more consequence, will now have to report more to the credit bureaus and so forth. So they will need extra staffing, they will need extra staff members to review compliance and so forth. So they will start charging more. So it's important for you to understand what your budget is right now for these types of service providers and, be ready that this will increase and what you will do when it increases. You can decide, for example, to lower the number of installments. You can decide also to offer this type of payment mode to a select number of your customers. You don't have to offer every customer every payment mode. For example, if somebody comes into your cart, you offer them credit card. If they look like they're looking around or they're taking too much time on your checkout page, you can then offer them that buy now, pay later. Or if they get declined by credit card, you may want to offer them this. So you can start limiting the amount of customers that you actually offer this, because this is costing you a lot of money. I mean, 10%, for example, if that's what you're paying, that is a huge chunk of your profits and it can really eat away at your margins. So try to look at this as not only how many customers you're converting, but how much money are you making at the end of the month? And what is it costing you to be able to offer these types of options? Oftentimes, if you're paying close to 10% and, maybe your margins are 20, 30%, the cost may not actually be worth offering these types of payment modes. So know your data, really dig in to what is happening right now, because the changes are starting to come. And in the next couple of months, you're going to start seeing higher fees, more compliance issues, more declined accounts and so forth. So it's important to take a real good look right now and really understand what you need from these services to be able to grow and not have your sales suffer. If you have any questions on buy now, pay later or accepting alternative payment modes and how to really increase your conversions with credit cards, feel free to drop me a line down below. And don't forget to like and subscribe to this channel for more content. It really does help me out if you guys just click that button so I can continue informing you of ways to make more money in your store. I hope you enjoyed this episode and have yourself a great day.